Hey everyone. Unfortunately, Lucid delivered another disappointing quarter and the stock price is down nearly 20% after the earnings results came out. So in this video, I'm going to review those numbers and highlight why the stock price is down. And then I'm going to answer if I think this stock price decrease is a buying opportunity. Of course, coming into this quarterly update, I did not have Lucid stock rated as a buy. I told investors not to buy this stock. So you're going to want to tune in to see if I'm changing that recommendation. So without further ado, let's take a look at these numbers. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. All right, so Lucid delivered 1,734 vehicles in the fourth quarter and 6,000 for the full year in 2023. That was up 37% compared to 2022. In the fourth quarter, they produced 2,391 vehicles and 8,428 for all of the year, meeting the higher end of their annual production guidance of between 8,000 and 8,500. Now, I will say that this 8,000 to 8,500 had been lowered twice throughout the year. The first estimate for how many vehicles they would produce was 12,000. Then they lowered that to 10,000. Then they lowered it again to between 8,000 and 8,500. And they hit that range that they lowered twice. So for 2024, they're guiding just 9,000 units produced. That was a disappointment, and that was one reason why the stock price was down so much following the earnings update, is because of this guidance for 2024 of just 9,000 units. That would be up just roughly 560 for the year, right? Not very exciting increase for Lucid, which is supposed to be a growth stock. It's certainly valued like a growth stock. I'll share with you just how much it's valued as a growth stock. But if you're not growing or you're barely growing, do you deserve that kind of growth valuation? And that's what investors were grappling with after these results came out. Now, the EV industry overall has been struggling as competition has increased. It's not just that EVs are competing against each other, it's that supply chain shortages have eased. And so now there's internal combustion engine vehicles available for sale. Remember in 2020, 2021, 2022, for nearly 3 years, there were severe supply chain shortages that were hurting demand for internal combustion engine vehicles. So then consumers that were looking for a car saw that, oh, there's an EV available for sale. Let's buy it because I need to get to work and I can't buy another car. So let's buy this one instead. Uh, you know, it's okay that it's more inconvenient and all of the other downsides of owning an EV. I'm okay with that for now because I need a car to get to work, and internal combustion engine vehicles are just not available. They just don't have any. And if they have some, they're selling them at $10,000, $15,000, $20,000 above MSRP, and I'm having to fight with other customers to buy one of those. You know what? Let me just go to an EV because I can actually buy one. Well, now that's not the case anymore. There's ample supply of internal combustion engine cars, and people are choosing those in favor of EVs. Way more instead of EVs. Over 9 out of 10 people that are buying a car are choosing an internal combustion engine. And that's even with all the government incentives trying to push you towards an electric vehicle. So imagine when eventually these incentives run out, what the industry will be like then. So it's not looking good for the EVs or the EV industry. That's why I did not have Lucid stock rated as a buy. That's why I've told investors not to buy Lucid stock, and I've been telling investors that for several years now. And we're going to see if I'm changing that in this video, if the price decline is enough to get me to change that. Now it's down 18.2% following the result of these earnings, which were disappointing to be sure. And the main disappointing number is the production guidance of just 9,000 vehicles. So let's continue. Now, one note of enthusiasm for Lucid stock investors is the Gravity SUV will start production for late 2024. And the high-volume mid-sized platform is scheduled for late 2026. those are exciting updates. The Gravity SUV is beautiful. I saw the unveiling of this SUV, and Lucid overall, I have to say, is the best looking electric vehicle on the market by far. I have not seen any other EV that looks quite as nice as the Lucid. The luxurious platform, the cars look amazing, but they're also expensive, right? You're paying for that luxury. You're paying for that appearance, and the SUV was no different. It looks just as amazing as the sedans do, and it's coming out in late 2024. The price point was under 80,000, they said. But I think they're going to need to lower that even more, because I just made a video a few days ago about the SUV price competition heating up. Rivian just lowered its prices for its SUV EV. Ford said sales collapsed in January for its SUV EV, and it lowered its price for its SUV EV by several thousand. So Lucid may need to cut the price of the Gravity before it even comes out. The price point of just under 80,000 might still be too high. They might need to slash that to under 75,000 if they want to sell an abundance of these units. But for 2025, that should help boost the number of units sold and the number of units produced for Lucid. And then the mid-size platform scheduled for late 2026 could again provide another leg of growth for Lucid. But there's several, Rivian, for one, said that they're coming out with their lower priced platform in 2026. Tesla said it's coming out with its lower priced platform in late or mid 2025. So now you're going to need to have something lower just to be equal with the competition, because the competition is coming out with lower priced EVs, and you've got to be there just to be on equal footing. So it's not going to give them an advantage. It's just going to put them on equal footing if they are able to come out with that lower priced, high volume, mid-sized platform in late 2026. So thankfully, the company does have cash. It's got $1.369 billion in cash and $2.5 billion in short-term investments. So it's got roughly $3.8 billion of cash on hand, because it's going to need it, because it's losing a lot of money on the bottom line, and I'm going to show you just how much. It does have $2 billion in debt also, keep that in mind. All right. So in its latest quarter, it generated $157 million in revenue, and that was down from $257 million in the same quarter the prior year. So is this a growth stock? Is it a growth company? Doesn't look like it. Cost of revenue decreased in the latest quarter to $410 million from $615 million. But selling, general, and administrative expenses jumped from $170 to $240 million. It was having to spend more money on advertising to get these cars sold, and it still didn't sell that many units. The loss from operations barely improved in the latest quarter, down to $736 million loss. That was down from the $749 million loss in the same quarter ended last year. For the full year that ended December 31st, the company lost a whopping $3.1 billion on the bottom line. $3.1 billion losses. And that was up from a loss of $2.6 billion in the same year last year. So over the last 2 years, Lucid has burned through $5.7 billion, $5.7 billion to get itself here. And the revenue declined from $608 million down to $595 million, while cost of revenue increased from $1.6 billion up to $1.9 billion. So not good numbers at all here from Lucid, not in the least. And lastly, when you look at cash flow from operations, the company went through $474 million in cash flow from operations in its latest 3-month period. So it's going through roughly $500 million every quarter at this pace. So it's going to need those billions of dollars, because in just 4 quarters, it's going to go through $2 billion. Another $2 billion it's going to go through if it stays at this pace. So not very good numbers here, and you can understand why the stock price was down so much. But still, When you look at its valuation, Lucid is trading at a forward price to sales of 1.880. Now, I've brought some comparisons here. Ford, GM, Stellantis, which are legacy automakers, they're selling at a forward price to sales of 0.376, 0.271, 0.255. Lucid is trading at roughly 5 times the valuation of those legacy automakers that are profitable, that are generating billions of dollars in free cash flow, yet you're paying 5-6 times the valuation for Lucid stock. Why? Why would you want to pay a premium price, a 5-6 times premium price for Lucid, that seeing its revenue decrease year over year? It's not growing. You're not getting the growth that you're paying for. So why? And that's what I've been saying for several years now. These EV automakers are overpriced compared to their prospects, compared to their profit profile, compared to their cash flow profile, compared to their legacy automaker rivals. And unfortunately, the stock prices have fallen significantly for investors that have stuck with these EV automakers, hoping that their potential finally comes through, that sales finally increase. But that has yet to happen, and I don't think 2024 is going to be a good year for these EV automakers. Certainly so far is off to an awful start in 2024. So to update my recommendation, no, I'm not upgrading Lucid stock to a buy. I'm telling investors, do not buy this stock. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.